All right, welcome. And this is week 7, chapter 7. I don't see anybody here yet, but I'm going to go ahead and get started. So let's see, a couple announcements for you. I mentioned a few weeks back that there's an opportunity to be featured in a newsletter for the Career Technical Education Division of Hartnell College. Here is an example of what that looks like if you're interested in being featured. There's a student named Napoleon who has, well, when this opens up, you'll see there are a couple pages of him, information about him and some pictures, so you can kind of get an idea of what I'm talking about. This is something the Dean of Career Technical Education put together. Just gonna try to make it bigger. Oh well, okay. I don't know. It's not letting me make it bigger. There we go. Okay. So here we see a student. Oh, you know what? I guess this is okay. Student featured in the newsletter. And again, if you're interested in being featured, you can have some information written about you, some pictures, and something you can brag about to your family, maybe include it with your transfer application or whatever you want to do. So anyways, if you're interested in being featured in this announcement, there's a link to a survey. You can just fill it out and the dean will then have your information so that they could be in touch and talk to you more. And let's see what else I've got here. I have a video from some Cal State UMB students. These are accounting students at Cal State UMB who did internships because you're required to do some sort of actual work out in the real world as part of your academic program as an accounting student at CSUMB. So you'll hear here from 3 different students. The audio is not great, unfortunately, but let me go ahead and play it and hopefully you can get an idea of what their experiences were like as interns for local companies. Okay, so again, the audio wasn't great, but hopefully you at least picked up on their energy, seemed to be very enthusiastic about their internship programs. So if you do transfer over to CSUMB or another 4-year college, you might get to experience something like that, which is great because then it lets you apply some of what you're learning out in the real world. So other than that, by the way, welcome, Miguel. The only other thing I wanted to mention, we are in week 7, and that means next week will be week 8, which means our midterm will be due next week. We also have our video number 2 discussion And if you are interested in posting to the Personal Progress Journal, you can get credit for doing that by the end of week 8 as well. Okay, so in addition to our normal exercise problem set and chapter quiz due this week, we'll have an exercise set, problem set, and chapter quiz due next week. And next week, also the midterm Personal Progress Journal and video number 2 discussion. So a lot going on next week. The midterm, just as a reminder, has 50 questions. They're multiple choice. They're all questions you've seen on chapter 1 through 8 quizzes. So again, you can refer to the textbook. There's even an answer key in the textbook that has some of the answers, if you want to take the time to look them up. So if you've been doing pretty well on the quizzes, you'll probably do okay on the midterm. There is only one attempt though, and you do have up to 3 hours to complete the midterm in one setting. So make sure once you get started, you're not going to have any distractions or internet trouble. Okay, any questions on anything here before we get into our chapter 7 material? All right, then let's get started with the exercise set. Okay, so chapter 7 is about accounting information systems. And that conjures up images of computer systems, and that's definitely part of how we manage accounting information. In fact, I'd say most of it happens on computers these days. But it doesn't have to be. Accounting can be done manually. And as part of the accounting process, there are some steps that we're going to learn about, like special journals and subsidiary ledgers. These are part of the accounting overall system, just like everything we're learning in this course, but it's a part that we haven't been exposed to so far. So that's part of this chapter as well. Okay, so let's just go through. There are a lot of different topics that we're going to be covering here, so let's just go through them from the top. Fortunately, we have only 8 exercises and only, I think it's 5 problems in the problem set. And we're going to go through all 5 of those problems. So this week will be pretty easy for you as far as the homework goes. So let's go ahead and get started here. The first one, exercise 1, says to determine if each of these 5 things here is an input component, an output component, or a storage component. So in an accounting information system, you need to take information in, like financial transactions. You need to take in that data or information. The system then needs to process that information, store the information, and then create some sort of an output. So starting with A here, would a credit card scanner at a grocery store, would that be an input component, output component, or storage? Well, if you think about what a scanner does, if you hold your item up to the scanner, it reads the barcode and it tells the computer system how much to charge for that particular product, right? And it can also then update the inventory to keep track of the fact that the store sold 1 unit of that product. So really it is an input component because it's looking at that barcode, taking that information into the system to figure out what product it is and then act accordingly. So the scanner is an input component. So I'm going to go ahead and just put IC here for input component. Now the second one's a little tricky, a purchase order. A purchase order is an output component if your company created the purchase order. If your company received the purchase order, then it's an input component. So it sort of depends. So we have to read a little bit further here. And we see that the purchase order for windshield washing fluid was received, here's the operative word, by a manufacturer from a customer. The customer was an auto parts store, but that doesn't really matter. What's important here is that the manufacturer received this purchase order. So when they got it, it's basically a document, or it could be an electronic file, that says that this order to purchase whatever it is has been approved. That's what a purchase order is. In this case, 1,000 bottles of windshield washing fluid has been ordered by the buyer. So the purchase order is a document relaying that information. So if you are the receiver or recipient of that information, you could say, oh, great, we got this order and this has been approved by the buyer. It's not just some crazy person at the company sending us this order. It's actually officially coming from the buyer that they have approved this purchase. And so now we can go ahead and send them these 1,000 bottles of windshield washing fluid, and then they'll send us the money, right? That's how it typically works in a business-to-business transaction. If somebody just called up and said, hey, we want to order 1,000 bottles on behalf of our company, we might say, well, send us over a purchase order before we fulfill it, because we want to know that this is a legitimate order. Okay, so getting back to the question then, this purchase order that we received is something we would then input into our system. We would go into our computer system probably, or our manual system, and we would write down, order received 1,000 bottles of windshield washing fluid, right? So we needed this purchase order so we know what information to put into the system. So this is an input component, okay? Again, that one was a little bit awkward. The next three are clearer. A report of patients who missed appointments at a doctor's office. Well, that is something that the system would output. A report is something that uses the data that came in, processes that data, and creates a report. So this would be an output component. D, a list of the day's cash and credit sales. That's also an output, right? That's taking the data about the cash and credit sales and then turning that into a list, which would be an output. And the last one, electronic files containing a list of current customers. That is storage. The files themselves are just stored in the system. So that would be storage components. Okay, so those are the answers for exercise 1. Exercise 2 is similar. Here we need to look at all these items on the right. We have to figure out, is each one, where is it? Oh, it's right here. Which of these 5 is appropriate? And so we're going to have to use each of these multiple times, possibly, right? Because we have only 5 options in the left column, and we have 12 on the right column. Now, some of the ones on the right actually are none of the above. And they're not going to fit into any of these 5 categories on the left. Okay, so welcome, Jane. We are on exercise number 2. And here you can see quickly the answers for exercise number 1. We had 2 inputs, 2 outputs, and storage. So now starting exercise 2, the first on the right is check written for office supplies. Now a check can be an output of a system, right? You can tell your computer system to print a check, or you could hand write a check which if you then mail it to your supplier, it's coming out of your system going to them. However, this time it's not asking for just an output component, which would be anything related to output. It's specifically saying output device. Now you could argue that a check is a device, but it's not a device the way a piece of equipment would be a device, right? So for this exercise, when it says device, we're really talking about equipment. So a check would not be an output device. It is also not a source document for us if we're writing the check. It would not be an input device. It would not be data, information, or storage. And it would not be information processing. So it's none of the above. So we're just going to skip number 1, okay? And let's go to number 2, invoice from a supplier of inventory. Well, that is a source document. So we'll give Roman numeral 2 here to A, because if you recall from learning about this before, if you receive a document that has data that you need to input into your accounting system, that's an original source document. So an invoice from a supplier would be that. Number 3, which is payroll check, same logic as number 1. It really doesn't fit into any of these categories. Number 4, which is time card, well, that actually is a source document because on a time card, the employee records how much time they worked. And so that would then be used to process payroll. So that time card itself would be an original source document. Number 5 is computer software. That is used for information processing. So the software is what takes the input, processes it, and then turns it into an output. Number 6, keyboard. A keyboard is an input device, right? That's how you type into a computer with a keyboard. 7, grocery store barcode scanner. We already talked about that. That would also be an input device. 8, printer. A printer is an output device, right? Because the information from the computer gets printed out. All right, what about number 9, flash drive? Anybody want to take a guess on that one? Which category? Flash drive would be data and information storage. Same thing with number 10, which is hard drive, and number 11, which is the cloud. That is also used for data storage. You could argue that the cloud could be used for data processing as well. That's true. But usually when we think of the cloud, we think of it as a place to store data on the internet. And our last one, number 12, is an output device. A computer screen displays the information coming out of the computer. Okay. So we have 2 and 4 for A, 8 and 12 for B, 6 and 7 for C, 9, 10, 11 for D, and 5 for E. And we did not use Roman numeral 1 or Roman numeral 3. Are there any questions on this exercise? Okay, let's go on to exercise 3, another matching activity. Now this one is different because it's talking about these aspects of accounting that you haven't learned yet, and you'll learn right now. So in the past, I told you that every transaction gets recorded in the general journal and then gets copied over to the general ledger. And that's not exactly true. So it's true of many transactions, but a lot of transactions actually get recorded to a special journal And then at the end of the period, the total from the special journal gets copied over to the general journal, or at least to the general ledger. So, and the information from the special journals gets copied over to the ledger, but sometimes not to the general ledger. Sometimes it goes to a subsidiary ledger, okay? So it gets a little tricky. It's not really that complicated, but let me go ahead and walk you through how it works, and then we'll do this exercise. At least I'll walk you through the special journal part, okay? So on the left, we see 5 types of journal, the last one being the general journal that you're familiar with. The other 4 are the special journals. One is for cash receipts. Anytime we receive cash, we would record that in the cash receipts journal. And anytime we pay cash, we will record that in the cash disbursements journal. Now remember that in accounting, if you receive a check, we consider that receiving cash. And if we pay with a check, we treat that like we paid with cash. So the cash receipts journal and cash disbursements journal are pretty straightforward. Anytime we receive cash, cash receipts. Anytime we disperse cash, cash disbursements. The sales journal is for any time we make a sale on account. So if we make a sale and the customer pays at the time of sale, that goes on the cash receipts journal. But if we make a sale and the customer does not pay at the time of sale, that goes in the sales journal. Okay, so it's for sales made on account. The same logic applies to purchases. If we make a purchase of inventory and we do not pay at the time of purchase, it goes in the purchases journal. If we do pay at the time of purchase, it goes under cash disbursements. Okay? And the purchases journal is specifically for purchases of inventory made on account. So those are the special journals. Are there any questions on that? Okay, so let's go ahead now and match them up now that we know what's what. If we sold some inventory for cash, well, we received cash, right? So that goes under the cash receipts journal. If we sold some inventory on account, well, we did not receive cash, right? So that would go in the sales journal. If we received cash, and the rest of it really doesn't matter, if we received cash for anything, it goes in the cash receipts journal. If we paid cash to purchase inventory, cash disbursements journal. Paid a cash dividend to shareholders, again, cash disbursements. Anytime we pay out cash, it'll be cash disbursements. Okay, bought some equipment for cash. Well, then that's some more disbursements of cash, right? And okay, oh, wait a minute. Did I skip one? I did. I skipped, that was number 7. I skipped number 6. 6 is sold shares of stock for cash. So in that case, if we sold stock, we received cash, right? So number 6 is going to go under cash receipts. Number 7, bought equipment for cash. That's where we paid out cash. So number 7 goes under cash disbursements. Number 8 is an adjusting entry. Anytime there's an adjusting entry, it's going to go under general journal. Okay? Anytime it's not a disbursement or receipt of cash, it's not a purchase on account or a sale on account, then it's going to go on the general journal. In other words, if it doesn't go in a special journal, it goes in the general. Okay, and then we go to number 9, which is paid for a purchase of inventory on account. That's going to go under cash disbursements journal because we paid. And the same thing with number 10. We also paid. So it really doesn't matter if we got a discount or not. In both cases, we made a payment. So that's cash disbursement, okay? So if you see payment, cash disbursements. If you see received cash, cash receipts. So our answers here are 1, 3, and 6 for A. 4, 5, 7, 9, and 10 for B. Okay, 2 for C, nothing for purchases journal, and 8 for E. So purchases journal, we would have had to purchase inventory on account, and we didn't have any of those. Okay, if there are no questions, I will move on to number 4. Here we need to think which of these 5 journals does each of these transactions get recorded in? And if the answer is sales journal, then the answer of which subsidiary ledger is going to be accounts receivable. So let me explain that. The accounts receivable subsidiary ledger is where you keep track of how much each separate customer owes you. So every customer has their own account in the accounts receivable subsidiary ledger. In the past, I told you if a customer doesn't pay, we just record that to accounts receivable. Well, really it gets recorded in the accounts receivable subsidiary ledger for that customer. And then when they make a payment, that also gets recorded in their accounts receivable subsidiary ledger. And that way we know how much each individual customer owes. Okay, so if any of these transactions is a sale made on account, then we also will update the accounts receivable subsidiary ledger. If we have any purchases made on account, I'll italicize that, then we're going to update the accounts payable subsidiary ledger, because that is where we would record how much we owe to each supplier. So each supplier has their own account in the accounts payable subsidiary ledger. And in that account, we keep track of any time we buy on account and any time we pay the accounts payable. Okay, so that's the accounts payable subsidiary ledger. All right, so let's go ahead and go through, starting with A. We paid a utility bill. Okay, well, a utility, that's like electricity or water. You could say we purchased electricity, but that's not really how we look at it. It's not a purchase of inventory. It's an expense. It's a utility expense. So we would not record that in the purchases journal, even if it was on account, which actually utility bills are, because you don't pay as you're using it. You get a bill after the fact, and then you pay it, right? So when you get the bill, at that point, you have an account payable. But the point is, this does not qualify as a purchase because it's not inventory. So we're not going to record it in the purchases journal. However, when we make the payment, that is a cash disbursement, right? So that is going to go under cash disbursements. Okay, and because it's not the sales journal, we don't need to record it in accounts receivable subsidiary ledger, because it's not a purchase for the purchases journal, we don't have to record it in the accounts payable subsidiary ledger. So I'm just going to put not applicable for subsidiary ledger. Okay. Then B is we sold some inventory on account. That would be the sales journal, right? We sold it on account, so that goes to the sales journal, and that would then get recorded in the accounts receivable subsidiary ledger. So we can keep track of how much that customer owes us. Okay, C says we received, but we did not pay a phone bill. All right, again, it's not a purchase of inventory, so it's not going to go under purchases. We didn't pay it, and it's not a sale, so this is going to go in the general journal. And no subsidiary ledger. Then we get to D, we bought some inventory on account. Well, that gets recorded in the purchases journal. And then we would have to also update the accounts payable subsidiary ledger to keep track of how much we owe that supplier, right? E, we borrowed money from a bank. Okay, well, we received cash, so that's cash receipts. No subsidiary ledger. F, we sold some office furniture for cash. That would be cash receipts again. G, we recorded depreciation. That's an adjustment. Remember, adjustments are always general journal. H, we accrued some payroll at the end of the accounting period. That's also an adjustment. I, we sold some inventory for cash. Okay, so that's going to be cash receipts. And the last one, we paid interest on a bank loan. That's a cash disbursement. Okay. So again, the only time we use a subsidiary ledger is the sales journal, where we update the accounts receivable subsidiary ledger, and the purchases journal, where we update the accounts payable subsidiary ledger. We have A and J as the two cash disbursements. Let's double check that. A is cash disbursements. J is cash disbursements. Then we have sorry, I was just thinking about something. I think we're okay. C, G, and H are all general journal. C, G, and H are general journal. Then we had cash receipts are E, F, and I. And we can see that cash receipts, cash receipts, cash receipts. Okay, so we got that all right. Those are the answers there. Are there any questions on this exercise? No? Okay. Moving on to number 5. This company, Catherine's Cookies, they had a beginning balance in accounts payable of $8,200. So at the beginning of the period, they owed $8,200 to their suppliers. Now, in the cash disbursements journal, there's an accounts payable column that has debits of $6,800. Okay, let's think about that. When accounts payable goes up, that's a credit, right? Because accounts payable is a liability. It's not part of deal. It goes up on the credit side. It goes down on the debit side. So if there's a debit of $6,800 in accounts payable, that means that we must have paid it down, right? Or we returned some merchandise, but somehow it went down and we don't owe as much money anymore. Then it goes on to say that the accounts payable credit column in the purchases journal reveals 10,500 in purchases. Okay, that makes sense. If it's a credit to accounts payable for purchases, that makes sense. We didn't pay, so our accounts payable went up, which happens on the credit side. Okay, so now we have to figure out what is the remaining accounts payable. Well, let's just do this like a T account to get our answer. I think that's the easiest way to visualize it here. I'll do something like that. So this is our accounts payable. Okay, try that again. Accounts payable account. There we go. Okay. So again, we had a beginning balance in accounts payable of $8,200. That would be a credit balance. Then in the cash disbursements journal, there's a debit to accounts payable of $6,800. So again, we probably made a payment to reduce our accounts payable. But then in the purchases journal, it shows we made another 10,500 in purchases, and that's a credit to accounts payable. So then to get our total, we can take our beginning $8,200 that we owed minus the $6,800 that we paid. Oops. And then plus the 10,500 additional purchase that we owe for, and we get an ending balance 11,900. Okay, so we took our beginning minus our payment plus our additional purchase, and now we owe 11,900. Okay, so that is our answer. $11,900 accounts payable balance. Okay, any questions on number 5? All right, let's go on to number 6, and here we can see what a sales journal looks like. Now, it's similar to a general journal, but it's actually a little bit easier because we know if we made a sale on account, we're going to debit accounts receivable, we're going to credit sales or whatever our revenue account is. So we don't need to put those account names, and we don't need to put 2 separate numbers. We can just put one number and we know it's a debit to accounts receivable and a credit to sales. So to complete this exercise, what we're going to do here is say the first transaction was for this customer, Maroon 4. Their invoice number, this is a number we would have generated when we made the sale, was $325. Under the reference column, we could put whatever we want. It might be useful to make a reference of the customer's account number that we had assigned to them. So we could put 4501, their account number, and then the amount of the sale, $2,400. And that's all we have to do. For the second customer, that's BTS, invoice 326. Your invoices are typically sequential, so each invoice will go up 1 number. Their customer number, I put that in. The amount of the sale, I put that in. Okay. And the last customer here, Imagine Fireflies, invoice 327, put in their customer number and the amount of the sale. Now, if we're doing the perpetual inventory method, you might recall, we would also record the cost of goods sold and how much inventory we no longer have because we sold it. However, they didn't give us that information. So either we're doing periodic inventory or we're just supposed to skip it, because normally we would put that in a separate column for cost of goods sold and merchandise inventory. Okay, but that's all we have to do for exercise 6. So let's go on to number 7. Again, let me know if you have any questions. All right, number 7. Now we see a cash receipts journal. So this looks a little different. With the sales journal, we know it's always sales made on account. Purchases journal, we know it's always inventory purchased on account. With cash receipts, we could receive cash for a variety of reasons. So in every case, there's going to be a debit to cash. Sometimes there might be a debit to sales discount if we paid a supplier within their discount window and we got a discount, then we would put that information here under sales discount. But whatever it was that we were paying for, it could be we're paying down an account receivable. It could be why would it be sales? Oh, yes, because I'm sorry, I said that backwards. Okay, I got twisted around. So it could be that we received cash because a customer is paying down their account receivable. That's what I meant to say. It could be we received cash because we made a sale to a customer. Or it could be we received cash because we returned something to a supplier or overpaid a supplier. So there are various reasons we might receive cash. Okay, so all of that is just going to go in this column, and we'll see later how it's a little tricky sometimes to then figure out what each one was for, but that's where your reference number might be useful. Also, the invoice number might be useful. Okay. So on June 12th, we got a payment from this client, Jolie Inc. So we're going to put the client's name under account. We're going to put the invoice number. This is our invoice that we sent to them. We'll put that here under invoice number. In the reference column, we could put our customer's customer number, or we could put where this information came from. For example, when we originally made the sale, that would have been recorded in the sales journal. We could put sales journal and the page number here for reference if we wanted to, but we'll just skip it for now. Okay, and then cash. We got cash of $1,225. And it says up here that the merchandise that we sold had a price of $1,250. So that's the amount of the customer's accounts receivable that they're paying down was $1,250. So the difference between what they owed us and what they paid us is $25, and that's because they paid on time and got the sales discount. So we have to record that here as a debit to sales discount. We could see they paid on time because the purchase was the 12th. The invoice was dated the 12th. No, I'm sorry. Another mistake. The purchase was on the 4th. They had 10 days to pay. They paid us on the 12th, which is within the 10 days. And so they got a 2% discount. 2% of $1,250 is $25. Okay, so it all works out. Now the June 15th payment is from this customer, Portman Inc. Their invoice number was 1027. They paid us $2,500, which was exactly how much they had purchased. They did not get a discount. They did not pay on time. And the June 17th says we received a refund check, gives us the check number from State Power Company. Okay. I always forget this one. Okay, let's come back to account. I want to check and see what we put there. in this scenario. So basically what happened is when we paid our electric bill, we paid them too much. So they sent us back $72. So we got $72, cash gets debited, and $72, some other account gets a credit. What account is that? It's going to be the utility expense account, because our utility expense is actually $72 less than what we originally recorded, right? We thought we owed them more money. That's why we paid them extra money. They sent us back that extra money. So now we're reducing our expense and our cash is going up. So what I don't remember here in this case, I think I do remember, we're going to put State Power Company as the account. And we're going to put in reference, in parentheses here, that it's account number 450. You could put that over here in the reference column if you wanted to. But I think in this one, the way the official answer looks here is they put State Power Company account 450. Okay. Either way. All right, so that's how we do that exercise, cash receipts journal. Any questions? All right, let's move on to our last exercise. This one's short and sweet. So here we have some sales and some payments. And we need to update the accounts receivable subsidiary ledger. What we're going to do here is we're going to total up what each customer owes us. So Green Lantern made a purchase from us of $1,999. It was a credit sale, meaning that they did not pay at the time of purchase. But if you'll notice, a couple days later, they made a payment of $1,000. So all they owe us now is $999. Wonder Woman made a purchase of $2,000. We see that up here. She did not make a payment, so she owes us $2,000. Black Panther made a purchase of $1,875 and has not made a payment. Now there is Flash up here. Flash made a purchase of $3,050 on account, but paid the full thing. So at the end of the period, Flash does not owe us anything. So to see what's the total that is owed to us by our customers, we can add these up. Oops. So Green Lantern plus Wonder Woman plus Black Panther, we get $4,874. So that is the total that our customers owe us. Okay. And that's all we have to do for the exercise set. Now we can go on to the problem set. Looks like we will be finishing very early today, which is a good thing, because my brain is struggling. It's been a long day. See, and I'm not even clicking on the right thing here. Okay, let's open up the problem set. It's easier, I find, to see the problems if I open up the problem set. Okay, so we've got 5 problems, and we're going to actually go through all 5 together. So this is going to be an easy homework week for you, because you're not going to have to solve any of these on your own. Starting with number 1. So in number 1, it says that the bookkeeper is preparing to close out the books. They look at the account receivable control total. That's where they can see the total amount that our customers owe us. Okay, and that shows this amount here. But if they look in the accounts receivable subsidiary ledger, where the individual accounts are for each customer, and they add up all those totals there, which should be the same thing, they actually come up with a different number. It's different by $600 exactly. So our job here is we have to look at these 4 customer accounts and find where is that $600 mistake. okay? I'll give you a tip. It could be a $600 mistake, or it could be a $300 amount that's in the wrong column. Because if you put a $300 debit that's supposed to be a credit, or vice versa, you're going to be off by $300 on each side. So your total is going to be off by $600. Okay, so let's see. Let's take a look one account at a time in the accounts receivable subsidiary ledger and see if we could find this $600 or $300 error. So this customer's account, by the way, they have an account number that we assigned them in our system. So their account shows that at the beginning of the period, they owed us some money. Then they made a payment. That payment was recorded on the cash receipts journal on page 175, in case we need to reference it. This was the amount that they paid, which reduces their accounts receivable in our books and leaves them now with a zero balance. So I don't see a $600 mistake here or a $300 mistake. So I think we can go on to the second customer. Cadbury, they had a beginning balance of $877.30. We see an invoice. Okay, so that means that we generated an invoice because they made a purchase from us. That would have been recorded in the sales journal. Here it shows page 123. And so they made a $300 purchase. All right, could that be our mistake? Let's see. The customer owed us $877.30. Then they made another $300 purchase on account. So they now owe us $1,177.30. That doesn't look like a mistake to me. So I guess that's correct. Okay, well, let's try the next customer. This customer had this beginning balance. They made a $100 purchase on account. We can see their balance went up by $100. That looks good as well. I think we're getting closer here. Here's our final customer. We can see their beginning balance. Then they make a payment from the cash receipts journal, $500 credit, reduces their accounts receivable to $1,070.47. Okay, that makes sense. Then what happens? Then we invoice them because they made another purchase. We can see it was recorded on the sales journal. So that should be a debit to accounts receivable, but look, it was recorded as a credit. So instead of subtracting that $300, really, we should have added it. And the answer would then be $1,370.47. That's a $600 difference. So that was the mistake. So what is the mistake? The Netflix Inc. purchase should have been debited to the accounts receivable, to the should have been debited to the accounts receivable subsidiary ledger. That is what it is. Okay. Nope, not that one. Accounts receivable subsidiary ledger instead of being credited, right? So we should have debited, not credited. And then we would have had the right answer to this total, right? But the answer to the question is what I just wrote. All right, any clarification needed on problem number 1? All righty then, let's go to problem number 2. So this is similar to one we saw before. Here we are updating our sales journal. Remember, the only things we record in the sales journal are sales made on account. That's it. So the first sale is to Green Lantern Inc. So we put that under account. It's invoice number 1. We could put the customer number in the reference column if we want. And the amount of the sale was $1,999. The next sale is to Wonder Woman Inc. That is invoice number 2, customer 102. And the amount was $2,000. Then we go to June 3rd. We make a sale to Flash Inc. on account. Invoice 3, customer 103, and the amount is $3,050. Okay, now notice the next transaction is a payment that we received from Green Lantern. Well, we don't record payments in the sales journal. We would record the money that we received in the cash receipts journal, right? So we will skip it for this exercise and go on to June 5th. Black Panther made a purchase from us. So if they did not pay at that time, that would go on the sales journal. Invoice 4, customer account 104, and the amount. Okay, so that's all we have to do for that problem. Not so hard, right? Sorry, oh my goodness, a yawn. I need to take a nap, but unfortunately that's not going to happen right now. Okay, because we need to finish, right? We got 3 more problems here. Problem number 3. Okay, so here we see we've got a sales journal. That's where we will record any sales made on account. And we have a cash receipts journal. That's where we'll record anytime we receive cash. First transaction, we sold 50 items to this client. The total is $4,000. And it's on account. We know it's on account because we see payment terms, right? If a customer pays cash, you don't need any payment terms. But if they don't pay at the time of purchase, you need to specify what the payment terms are. In other words, when do they need to pay, and do they get a discount if they pay early? So in this case, to record this in the sales journal, we're going to record the customer's name under account, the invoice number, this is invoice number 12. We'll put the customer account number for reference, and the amount of the purchase. For us, it was a sale. For the customer, was a purchase, was $4,000. Okay, so that's a debit to accounts receivable and a credit to sales. Now, if we knew the cost of goods sold, we would record that as well. They didn't give us that information, so we'll skip it. The next transaction here is a sale to another customer for cash. So in this case, it's not going to get recorded in the sales journal. It's going to get recorded in the cash receipts journal. This sale was for $2,150 and invoice number 13. Okay, so we would put debit to cash, and this would be a credit to sales. Okay, again, the credits could be for multiple types of accounts, so sometimes that gets a little tricky. For now, all we have to do is just put the amount in the credit column. Okay, then we go to July 8th. We made a sale to Smith Manufacturing. All right, it's invoice number 14, account 178, and the amount is $5,000. Okay. Then we look at the next transaction on the 9th. We get a payment from Palm Springs Inc. Well, they owed us $4,000, so I'm guessing that's what they paid us. So they paid off their accounts receivable. but did they get a discount? Let's take a look. So Palm Springs Inc. made their purchase July 1st, and the invoice was issued that date. They had 10 days to pay in order to get a discount. So that gives them till the 11th. So yes, they do get a discount. The amount of the discount is 2%. So I'm actually going to say if they owed us $4,000 times 2%, they're getting an $80 discount. And the difference is what they need to pay us. Okay? And the last part of this problem, we got a payment from Smith Manufacturing after expiration of the discount period, so they do not get a discount. Oh, I forgot to put the customer name here, Palm Springs Inc. They were paying down invoice number 12. And then, so the last one, Smith Manufacturing, they are not getting a discount. They are invoice number 14. And the amount that they owed us is $5,000. So that's a debit to cash, credit to accounts receivable. Okay, so let's check those. We are with problem 3. Okay, all right, that came out right. You might notice here they put the customer's account number next to the account name instead of putting it in the reference column. It's fine either way. It doesn't really make a difference. Okay. So we're done with problem 3. We've completed the sales journal and the cash receipts journal. Now let's move on to problem 4. Okay, so what we're going to have to do, we have a sales journal and a cash receipts journal. We're going to have to complete these T accounts. It's kind of like we're copying the information over to the ledger. All right, let's start here with the sales journal. We know that every transaction in the sales journal is a debit to accounts receivable and a credit to sales. And then if we had the cost of goods sold and merchandise information, we could add up that column as well. But for now, we'll just deal with what we have. So if we add up this company's sales, I got $4,577.29. Okay, so that is the total accounts receivable and total sales from these transactions. I'm going to go ahead and see how it says debit accounts receivable, credit sales. I'm going to go ahead down here, debit accounts receivable that much, and credit sales. Okay, so basically I'm transferring that information from the journal into the ledger because these T accounts represent the ledger. Okay, then we go to the cash receipts journal. Well, this column is all cash, right? Every time we receive cash, cash goes up. So let's add up all of those transactions. $3,945, that is the total increase of cash. So that goes over here. Okay? Debit to cash, right? Just like it says right here. Then we have sales discounts debit. Well, there's only one, it's $20. So let's go ahead and add that. Sales discounts, only one debit, $20. Then we've got these accounts over here, right? Which could be a variety of different things. So let's take a look and see what we think they're from. The first one says cash sales. So we already recorded the cash part. This other 465 is the sale, it's the revenue. So that's going to go right here under sales. Then the second row and the fourth row each talk about a payment being received from a customer. Okay, so the first customer paid us $1,000 on the 5th. Next one paid us $500 on the 21st. So that's a total of $1,500 we were paid by our customers. That reduces the accounts receivable, right? So it's a credit to accounts receivable. And the remaining transaction is this bank loan. If we borrowed money from the bank, well, our debts go up, right? So notes payable goes up by $2,000. And you might be thinking, yeah, but cash also went up by $2,000. It did, and that was already included in this cash total. Okay, so at this point, if we add up all these debits and add up the credits, they should equal. Now, technically, we're done with the problem, but it's always good for accountants to check their work, right? So let's go ahead and add up the debits from this transaction. So I came up with 3 debits totaling $8,542.29. Now let's add up the credits. Let's try that again. I think I might have done something wrong. Okay. Debits first. Okay, those are the debits. I'm going to record that in memory since my memory is not working too well right now. And let's go ahead and now compare that with the credits. Okay, and it is the same number. So, and maybe that's what I did last time too, not sure. But so that helps confirm we must have done this correctly because we have the same debits as credits. Okay, so very good. That's how it looks when you take things from the journal and you copy them over to the ledger, at least if you're using T accounts to represent the ledger. And that brings us to our final problem. This one's actually really quick and easy. So we are just about done. Okay, so we've got these 4 transactions here. And we have a purchases journal. Well, the first transaction says we bought some inventory on account from Price Inc. So again, if you're buying inventory on account, that's when you use the purchases journal. We put the supplier's name under account. If we had a purchase order or some kind of reference number, we could put those in. And then the amount of the purchase was $2,000. So I'm going to put that here. Oops. Try that again. Put it right there. $2,000. Then we have another purchase from Cabrera Inc. $3,000. And then we returned half of the inventory to Price Inc. Okay. So that does not get recorded here because remember, this is only for purchases made on account, not for returns, not for purchases made by cash, and really not for any purchases other than inventory. Okay, so we'll just ignore that. return. That actually will get recorded on the general journal. Yeah, because we haven't paid. If we had already paid for the merchandise and we return it, we would be getting cash back from the supplier, and that would go on the cash receipts journal. Okay. And then we have one final transaction. Price Inc. is the company. We bought $4,200 worth of inventory. Okay, so if we just add this all up, we get $9,200 of inventory we purchased on account. Looking at the purchases journal does not tell us the balance of those accounts. It does not tell us our payments that we've made on those accounts. All it tells us is the amount that we purchased on account. Okay, so here we are, the last problem. And yes, 9,200 is correct. Okay. And we're done. Are there any questions on the exercises or problems from this week? Or any questions whatsoever? No? Okay. Well, let's finish 44 minutes early and enjoy the rest of your week. Let me know if you have any questions. Otherwise, I'll see you next Tuesday.